Hi, this is Anthony Parent of Parent LLP, the IRS Medic, and welcome to Part 6 of our 2014 Guide to the IRS Offshore Voluntary Disclosure Initiative. In this video, we are going to be talking about the OVDP process. We're going to be talking about pre-clearance, the submission. We're going to be talking about the closeout letter known as Form 906, or what other people decide to do, opt out for lower penalties. And a little bit about us. We are Parent LLP. We are located in Connecticut and we serve taxpayers worldwide. So I want to talk about the first step of making an offshore voluntary disclosure, of making a standard offshore voluntary disclosure. And that is, you file a pre-clearance. And the reason why you do this is that in order to make a complete voluntary disclosure, you need to have your tax returns done. Well, that's going to take some time. And if it's something where you know you're going to enter into the program, the pre-clearance is a nice way to get some security that you won't be charged with any criminal crimes while you are waiting for your tax returns and missing FBARs to be done, because those can certainly take a while. And it can certainly take a while to get documents from offshore bank accounts. For step 2, it's called waiting for the acceptance. We used to get our acceptance into the program, their pre-clearance, used to be about 2 days. We'd get a fax back. Now it's about a week. There seems to be a few more people getting into the program. We did have one that took us 4 weeks to get back. We have no idea why. Our client had no criminal exposure, and as you can imagine, he was wondering why. So we have seen that delay up to 4 weeks. That can certainly happen. Step 3, this is where we will make our submission. We may have to file a Form 872 to agree to consent to the extension of the statute of limitations, and we will be supplying the IRS with amended tax returns, with bank statements, work papers. We will also be filing FBARs and showing proof of that. The FBARs are all now filed electronically. We will also be giving our penalty computations and be making sure that we are clearly explaining where there is transferred funds so that money is not double counted. And if there is real estate, that making sure that any the money bought for real estate won't be double counted, both in a high bank account balance and in the property's value. And so step 4 involves us with a little bit back and forth with the OVDP examiner. They'll verify and or correct changes. They will agree or disagree with our penalty comps we provide. And one of the big things we always see is a lot of other taxpayers and representatives fail to include life insurance, foreign life insurance, and there's a whole bunch of special rules on that, and rental real estate. Those are the big issues that come up. One of the things that happens in this process is you may see something called an IDR. That's an information document request. Less is best, for sure. And some of these IDRs the IRS would send out were somewhat self-induced, because they were for time saying, and I actually still think this is on the OVDP FAQ, they would say for certain accounts you didn't need to provide the documentation for that. Well, let me tell you something. It doesn't matter how big or small. The IRS wants to see bank statements on everything, or if it's a passbook, a copy of the passbook. So that's just something that we've learned as we've gone along, how to anticipate the typical IDRs, because really what we're trying to do is get this done as quick as possible. And if the IRS is sending out requests for documents, that's going to slow things down. And also, sometimes, so many times, we submit the documents and the IRS just didn't know what they were when we submitted them. So we go out of our way to explain things to them in our submission. Step 5. Now, step 5 is when the OVDP examiner will send a Form 906 with the income tax changes, proposed changes if applicable. Well, the Form 906 is really hard to understand, and you'll see that there's 3 copies of those that all need to be signed. That's if you agree with it. And they're just really, really hard to understand. Now, in this, some people get upset because when they read the language of this, it sure seems to them that they have to admit they were doing something criminal even though they weren't. It actually doesn't say that. It just says that you will admit that you had unreported income. You don't have to admit that you did anything criminal. And in there, you'll see the offshore penalty. Calculated, and then you'll also see an income tax change on a different form if there is one. Many times we like to see that no change. That means we did everything right. But again, a lot of times when there's some difficult accounting, especially with PFIX, there may be income tax changes. You will get a copy of that 906, and so will your legal representative. Now, this is something we've found out from clients who have switched horses, is that we've seen that the Form 906 will be sent to elicit a response from a non-responsive representative. That is, if you just send in a whole bunch of stuff without explanation and the IRS doesn't kick you out, they'll just send a 906 that might have these really, really big penalty computations on there. And that is their way of saying, do you agree with this? I don't think you do, but you haven't given us the documents we need to find your way, so here is a big scary letter. So that's just something to be aware of. If you do get a Form 906 out of the blue and wondering what the heck it's about, it's probably not all of the items. Explanations have been delivered to the OVDI examiner. And one of the things is that the OVDI examiner really can't go and contact you directly unless there's a sort of a pattern of being ignored. But so this is really why they like using the Form 906 to talk to you if you have a representative, because it is something they're allowed to send out, and usually hopefully it generates the right response so that you can respond to the concerns to lower a penalty amount. Now let's go to step 6 here, and this is where you agree or disagree with the offshore penalty amount as calculated from the penalty base. And you agree with the income tax changes. The income tax changes really aren't typically the big deal because, again, they're somewhat nominal compared to the offshore penalty. So let's assume you understand 906. Well, do you want to accept it? If you intentionally evaded taxes, yeah, you probably will. But for the majority of the taxpayers who've hired us, really want to think about opting out if it's going to be worth it. Now, if you sign that 906, you are done. Hopefully, you just will need to pay. There'll be just some small changes. If you can't pay, Form 430, you will need to fill out a Form 433A, and your OVDI examiner will send that to a revenue officer to verify what your ability to pay is, and then you'll be on an affordable installment agreement. Now, something that will probably happen down the line is after you get into that installment agreement, after a year or so, you may want to revisit that to see if you could file an offer and compromise on it. We see it as a Title 26 tax assessment and see no reason why you could not file an offer and compromise on that. So now let's suppose you do not agree with the number. What can you do? Well, here's your opt-out option. This is where we like to opt out. We want to see what the exact number is if we don't opt out, so our client can make an educated decision on opting out or not. Sometimes some people, I think, are opting out at the beginning. Well, why? I don't really see the benefit to that, because sometimes there can be a misapprehension of whether or not something is actually in the penalty base. And there's a whole bunch of different examples for that I don't have time to get into. So we just like seeing what the IRS's number in that 906 is going to be before we make a decision to opt out or not. Now what happens is the OVDI examiner will pick at least 1 year to audit, and wouldn't you know, it will probably be the year with the highest account balance. And then what happens is your entire return is open to that Title 26 audit. Now, I've said Title 26 a few times. That just means regular income tax, whereas FBAR is Title 31. And it's different assessments. The IRS is in charge of both right now, assessing Title 26 and Title 31. But I guess Title 26 is true tax, and Title 31 is just something that the IRS was compelled to do because they're better at the administration of it rather than the financial crimes unit. So what happens is your entire return is open an audit. So this is what we like to people to think of, is that even if they have great opt-out facts, does it make a lot of sense to opt out when domestic income as well will come under scrutiny? Now, if you're a W-2 employee, you probably don't have a lot to worry about. But if you have a lot of passive rental income, is one example. I've seen a few people, we've advised them not to, because when we look at what could happen, especially when for many consecutive years their expenses sort of always happen to zero out their income, if you understand what I'm saying, that we say, this is really an audit that we might not want to get into, and we can just accept that standard offshore amount. So that's really something you would want to have someone with the experience of audits on how they go. Take a look at your returns to see, is this really going to make sense? Is this going to be beneficial to you? Then once the Title 26, now at the same time the Title 26 audit's going on, the examiner will also do a Title 31 FBAR audit. And this is where they're going to ask you, why didn't you file an FBAR? And the job of an attorney or representative is to minimize any bad facts and maximize the reasons why you didn't know and have that explanation for them. Now, usually these will be done over the phone. And for most of our clients, it's not a real big invasive process. And for big complicated case, we have had IRS OVDI examiners come into our offices and meet our clients. And in that case, we sort of felt that we had the burden, and we prepare our clients very well to handle that so that they feel comfortable answering these questions. And that shows that we want to put a human face on it, that these big penalties could really affect someone who looks like a pretty nice guy. That's a really important thing to do when these OVDI examiners, really most of them are just people like you and me, and most of them are pretty nice people, and they're really not looking to, it's my opinion, not really looking to ruin someone's life if they have a nice picture of that person. So now with the opt-out, your best case is you get a warning letter, and that is that 0% FBAR penalty, nothing at all. That's just basically them saying, don't do it again. And here's an example of probably when you wouldn't want to opt out. Were you given a warning letter before? If so, then you probably wouldn't. But if you've never been giving a warning letter, if it's something that you had no idea about, and again, like 96% of our clients, you probably would be a good opt-out candidate. Even if you're marginal, maybe you should have some penalty, and this is what our non-willful is for, because those are still pretty significant. Of course, in relation to the the willful 50%, it's not as big, but still, if you're getting penalized $10,000 per year for a non-willful, yes, that's a lot better than what could be crippling. $10,000 is still a decent penalty, and if they get you a few years, it's still an amount, and it still might be a lot better than that standard 27.5% penalty. So that is what happens. So that is what you want to do in the opt-out. Now, what if you don't agree with the opt-out? Okay, you can accept that opt-out, and you will sign a consent to the FBAR, the non-willful penalties, and pay them. That's going to be Form 13449 if you're so interested. You can accept those changes or no changes, and you can accept the changes to the return, or if you don't, you have the full appeals rights open in tax court, because it's a Title 26. The tax returns are Title 26. It is the FBAR that is Title 31. So there, with the FBAR, you do have administrative remedies available, and they're really supposed to be consistent with the FBAR appeals. And I'll tell you that so many of our cases, it's the same facts, or it's just so similar. So there's great chances, and I know a lot of people are afraid of doing the opt-out, but in a lot of cases, and as we have seen things going, it really is worth the extra time and legal expense to go through that, because there can be such a huge savings. Now with FBAR, if you disagree with it, you don't have tax court, okay? Because it's a Title 31. Now I'm not sure if that's going to change, but I'm not sure how. They may have to do something. But right now, if you can't get any agreement administratively, what they'll have to do, and I think there was just one case. There's only one case where they did this, and this is actually someone who did a soft disclosure. Is they filed in civil court. They have to file in federal district court, and for you to defend that, that's expensive. It's probably going to be cheaper than paying that standard penalty, though, I'll be honest. And now the process is expensive for you, but you know what? It's more risky for the IRS to do that. Because first of all, they have no criminal leverage to make you agree to pay something, right? Hey, you opted out of the standard penalty program, but you didn't opt out of the voluntary disclosure. You still have the criminal protections. So now here's the challenge that the IRS district counsel is going to have when they're suing you for willful or non-willful FBAR penalties, is they're going to have to convince a jury, right? They're going to have to convince a jury that it's okay because you didn't know about a form that the jury does not know about, right? You think, how many jurors do you think know about an FBAR form? Well, I mean, if they're foreign born, they're probably learning about it now. But in that case, they're not going to be on the jury, or they would rule your way. So you could see, I hope I'm understanding why it's really in the IRS's interest because of the hurdles they have in tax court. Yeah, you do too, but they really do. That their FBAR administrative policy, because unlike the income tax, they just can't assess this and send you a bill. The only way for them to actually collect on the FBAR is they need a judgment. So it's really, really hard. So they have their own pressure to come up with a reasonable amount, if you can understand what I'm saying here. So that's really where and again, if you don't have the criminal charges against you, and now just contrast that with someone who does a soft disclosure. Well, the IRS has something criminal hanging out over them, and then the IRS also says, well, you did something we told you not to do, and so that's where it can be a little bit different. But even somebody who did make a soft disclosure, they're probably not going to have to face the entire. They're going to have a little bit more work to do, but they're not going to have to. They don't have to just take it or leave it. Expect the best. I mean, we just think that for efficiency, using the standard program and opting out is just a better way to go. And then you don't have to worry. You don't have to look over your shoulder. You don't have any sleepless nights. So that's just the way we like to do things. And we won't do a soft disclosure for anyone, in case you're wondering. Now, here's some notes that we have found out along the way, and some things that we have done, some habits we've had. Pay your taxes with your submission. Okay? Once you have your amended returns done and you see that you owe money, we want you to pay that. You know why? Because your interest is running on that. And it has been running from actually the date, it could have been running for many years. If you're amending a 2006 return and you end up owing $100 more, well, the interest was actually running from 2006, even though you may have just prepared that return. The other thing is that when you pay your taxes with your submission, it just makes you look better. It makes you look a lot better. That you are just, hey, look, I'm a regular taxpayer. I pay what I know I owe. I just didn't know I owed this. As soon as I found out, I paid it. And you see, that argument comes in real handy when we're doing our opt-out negotiations in Title 31 interview with the OVDI examiner. It's a very, very helpful thing to do. So that's always something you want to do. Pay your taxes with your submission. Typically, I mean, so many of our cases, the unreported taxes is just so minimal, it's not a big deal anyway. But even if it is, just do your best to pay those taxes. You can hold off on paying the penalty, though, that's for sure. Now, here's another thing, something we've learned along the way. Don't expect ACS to understand what is happening. Now, what's ACS? That is Automated Collection Services. Sometimes we've seen when clients have submitted returns and there's a new balance, and even if they pay it, ACS doesn't quite understand what's going on. They might not understand that you are in the voluntary disclosure program, and the rep you talk to might not even know what that is. And there are ways just to get them to understand so that they're not trying to collect on things that you are still that are still open to interpretation. Here's another thing. It may take some time. If you are in and out in 14 months, that's good. Okay. Now, our first submissions have taken over 3 years. And the ones that we're submitting recently in 2013, 2014, they're moving along much better. But our 2011 ones took a long time. Our first 2012 took a long time. A lot of those are still open. And believe it or not, we still have an opt-out from an OVD I submitted in December of 2009. I am not kidding you. And if you know, there actually was no program open in 2009, which is a client who learned about it a little too late. And then we learned about the opt-out process. And that is a case where my client is okay with it taking so long because their tax change was a few $100s, and they've already paid that. And really, it is they have the best opt-out facts in the history, and it's actually something, if you read the story, it would probably make you cry a little bit, and maybe your story is similar to that. So it's really something we're not worried about too much when that comes around. We're pretty sure we're going to get a warning letter. Maybe we won't even get that. So just be aware. It will take some time to get it going. The student ones are taking a longer time. And the old ones, well, they're moving along. We're finally getting some of our older ones closed out, but still, this one from 2009, that is, we'll see when that comes along. Hopefully, when it's done, I can publicize a little bit about what that one was about. It is a really, really interesting, heartbreaking case. Now, here's the thing: you might be wondering, is it worth it? And we've these cases of ours, these really big ones, and some of the first, the first one I did that was done in 2009, and some of the more recent ones in 2011 that we have completed in 2012. I always ask our clients, so knowing what you know now, would you have entered into the program and done it? Because there has been a process. It certainly has been a process, and is not just a simple fact of amending returns, crossing fingers, hoping for the best. It's actually pretty complicated, and it's a lot more difficult than people think. So I ask them, I ask our clients, is it worth it? Every one of them have said yes. Now, one of them is the opt-outs have gone better than expected. But even those who have agreed to this standard penalty are happy it's over. And I recall a conversation I had with one of our earliest, and he was seriously contemplating if he should pay what was then a 20% FBAR penalty. There was no opt-out, but he was also engaging in rather perhaps intentional activity. And he was really considering. He said, I have enough money. I can go live overseas somewhere, and I could probably go to a place that I probably won't be bothered ever again by the IRS. And I said, all right, well, that's your decision, and I'm not going to tell you to do one thing or another. I would just say you might need more money than you think to live overseas, and so really think about it hard. And so he did. And then he just says, you know what, it's 20%. It's not the end of the world. You know what, let me just go through the program. And so we did. And we got him through the program. And right as we're finishing, a tragedy struck his family. And certainly something he wasn't expecting. And he had to be in the United States. And he has had to stay in the United States. And I think it's something where that right there was his value. And it's something where if he couldn't come back to the United States to take care of what he needs to take care of, he would never have forgiven himself. And I know that. So for him, yeah, it was worth it. And so I would just say, if you're gonna do it quicker, get it over. Just pull that Band-Aid off and do it. And if you're not, okay, just be aware that there really isn't all that much protection in the other so-called alternatives. And you don't need to hire anyone to make a soft disclosure. So don't think that you're buying any protection if you're making a qualified soft disclosure with somebody. That's something that, amending returns and filing FBARs is probably something you could do on your own, and just hiring someone to do that doesn't make a lot of sense at all. And it's something, again, that I strongly advise against, because it it creates uncertainty and something that will make negotiating FBAR penalties more difficult. Not fatal, I'm not going to say that, but just more difficult. So I hope you like this video on the OVDP process. And so I ask you to subscribe to the channel. Then you'll be notified when Part 7 of our 2014 OVDP guide is coming. And also, if you would like to talk to someone about making a disclosure, call our OVDP hotline at 888-477-4258 or email info@irsmedic.com. This is Anthony Parent of Parent LLP, the IRS Medic, and I thank you for watching.